Okay, folks, we're going to get started in a few seconds here. So there's still some good seats up in front. All the seats in the back have been taken. Okay, folks, we're going to get started. Good morning. Thank you for tuning in to our weekly update of preparing for COVID-19 recovery, loan options, and forgiveness strategies. It's again a beautiful day, sun shining, nice and warm, clear. And yes, we're still here talking about the forgiveness strategies and loan options. This is our slide that we must show that we are presenting this for general guidance only. And that does not constitute the provision of legal advice, tax advice, accounting services, investment advice, or professional consulting of any kind. So before making any decisions or taking any action, you should consult a professional advisor who has been provided with all pertinent facts relevant to your particular situation. And of course, if that's us, let's talk. We have a very exciting presentation today. We're going to be covering an update on all the loan facilities, the HEROES Act, the Health and Economic Recovery Omnibus Emergency Solutions Act, some new SBA FAQs and the interim final rules, and the long-awaited, yes, long-awaited PPP Loan Forgiveness application form. And we're also going to be talking about some of the questions that have been answered and many which still are a mystery. And then we're going to have a very lively, open discussion. Here is our recovery task force this morning. Myself, Todd Polinak, and my partners, Josh and Stephen, who will be sharing in the presentation. Yes, we are definitely not dressed this way. We are dressed much differently. I don't know, perhaps Josh is wearing shorts. And so I turn this over now to Stephen, who's going to give us an update on the other loan facilities. Stephen, take it away.
Thank you, Todd. Good morning, everybody. Thank you for joining us before hopefully everyone takes off for a nice long holiday weekend, but we do appreciate you joining us now. And we're going to discuss, before we get into the PPP, some of the other loan facilities, just as a reminder / refresher. So the EIDL loans, economic injury disaster loans, as you see here, these were a traditional loan product, not eligible forgiveness, that were replenished with an additional $60 billion via what was dubbed the CARES 2, CARES 3.5 Act in late April 2020. As a reminder, these are 30-year loans with interest rates ranging from 2.75 to 3.75%, depending upon whether not-for-profit or for-profit businesses are the applicants. As of now, however, the SBA is only accepting applications for agricultural businesses, and these loan amounts are now capped at $150,000. We'll see if anything changes in that, but for those agricultural, farming businesses, if you're still interested in applying, you may do so. The $10,000 grant is available as well. We'll go through what happens if you get the grant and are subsequently issued a PPP loan, but just know that that program for certain businesses is still available. In addition to that, we have the Main Street loan programs, which we've covered in our prior webcasts and webinars. This is a $600 billion loan facility administered by the Federal Reserve. So the SBA has no involvement in this program as it stands right now. There are 3 loan facilities: the new loan, priority loan, and expanded loan facility, which really depends upon the amount of debt that you have in the books, as well as leverage and some other items. These are 4-year loans based on LIBOR. The guidance was released, but the launch date has not been announced. Although just Tuesday of this week, there was a Senate Banking Committee hearing where Treasury Treasury Secretary Mnuchin and Federal Reserve Chairman Powell indicated that the program is expected in early June. So within the next 2 weeks, we should see the rollout of this program and perhaps get some more guidance in terms of eligibility, applications, and whatnot. But we wanted to make sure that for those borrowers that were interested in these loan programs, the Main Street Loan Program, PPP recipients are still eligible. So keep that in mind if you are looking for some additional funding. So now we'll move on, as Todd had mentioned, to the HEROES Act. We'll just discuss this briefly. It was voted in, passed by the Senate about a week ago. It's a $3 trillion package, but as it stands right now, it hasn't even been recognized by the Senate, meaning they're not even going to discuss it at this point, and a presidential signature is not expected in its present form. So you may be wondering, well, before we talk about that, let's go through some of the items that are in it, because you may be wondering, well, why are we talking about something that most likely isn't going to pass? And there is a reason. So let's just go through it. But as you'll see here, one of the main issues, at least as far as this webinar is concerned, is that there will be, or there are proposed enhancements to the PPP program in terms of length of the program, forgiveness period, deductibility of the expenses for tax purposes, the 75-25 payroll split, even an expansion in terms of what expenditures will be forgivable, and loosening rehire requirements that have a negative impact on borrower forgiveness eligibility, which Todd will discuss later on in the program, and also an extension of the loan program. But what's important to note here is that both the Senate and the House have introduced acts or bills that will look to modify or enhance the PPP program. Whether we go from 8 weeks to 24 weeks, or 8 weeks to 16 weeks, or they loosen the 75-25 payroll split, representatives and senators on both sides of the aisle are looking to expand the program. So I think that is good news for borrowers. We'll see where this gets us, but even if this HEROES Act doesn't pass, because there's other items in the act, which we're going to discuss in a moment, that may not fit the bill or the immediate needs as far as the Senate is concerned, I think PPP enhancement is front and center, no matter whether it's Democratic or Republican information or request, essentially. So in addition to the PPP enhancements, some other items in the HEROES Act, they're talking about suspending the $10,000 cap on state and local tax deductions for 2020 and 2021. So that is taxpayer friendly. However, the next item related to net NOLs, net operating losses, and excess business losses, these were loosened as part of the CARES Act, but this HEROES Act is talking about scaling some of that back. But again, we'll see where this stands. I would not recommend not filing the NOL carrybacks, still proceed, but just note that this is something that's proposed. Other items in the HEROES Act include the increased employee retention credit, potentially going from $5,000 to $12,000, so that's a big step. Additional stimulus payments, as we see here, and some other provisions essentially looking to help frontline workers and workers who have put their lives on the line, increasing certain tax credits, lengthening the unemployment benefits. The CARES Act has an additional $600 that's available and a longer period of time to receive these funds. They're talking about even lengthening that further, as well as some housing assistance. So as we said, this HEROES Act, it's an 1,800 plus page document, and we're not expecting it to pass in its current form, but it's a start for negotiation. And irrespective of that, I think we're looking at some enhancements or some modifications to the PPP program that hopefully will be borrower favorable, but again, let's see. So now that we've gone through that, I'm going to turn the program over to my partner, Josh, and he'll talk about some of the new SBA FAQs related to the certification, as well as some interim final guidance that was put out in the past week or so. Josh?
Thanks, Stevie. Good morning, everybody. Thanks for joining us. We'll just kind of recap some of the new FAQs. For those of you who are new to the PPP game, maybe you just got your application and you just got your money. or if people have been asleep for the last 4 weeks, we have lived through some very emotionally challenging times as we have been dealing with this good faith certification. If you remember back April 23rd, the SBA released FAQ 31, which further clarified the borrower requirement to make good faith certification that PP funding was needed to support the ongoing operations. If you remember, it focused very heavily on economic uncertainty and made you really look at current business operations and also access to capital as a means to help, subsidize the current, downturn for the business, as opposed to taking the PPP money initially. Then there were some additional FAQs that came out. 37 said it's not just for public companies, but also expanded the requirement to private companies as well. FAQ 39 came out and said that all PPP loans over $2 million will be subject to SBA review. Based on what we've read currently, it's estimated that there are 25,000 loans over $2 million, which will be reviewed initially. When Todd goes through the forgiveness application a little bit later, you'll see there is a question on there that asks whether between your loan and if there's any affiliated loans, and in aggregate they're greater than $2 million, they want you to disclose that as well. So ideally that pool may be even greater when you look at it on a full affiliated basis. Also too, then came FAQ 43, which initially extended the repayment date, right? If you determined that you essentially did not need the money or couldn't prove that there was true economic uncertainty, they gave you till May 14th to repay the money. Then FAQ 47 came along right around the time we did the webinar last week, which extended that date from May 14th to May 18th. And to date, Stephen actually shared an article with us this morning that said to date, $18 billion has been returned. So the scare tactic, FAQ 31, has certainly worked, and also increased the pool of money available to a lot of the smaller businesses. And there still is money available. We estimate, based on initial funding versus what's been repaid, there's probably still about $100 billion in the program. So if you have not applied and you're still thinking of applying, I do believe that the banks are still accepting applications. So then came FAQ 46. That was the one that was finally favorable for a lot of our clients and folks who we work with. And that provided a demarcation line of safe harbor, indicating that the good faith certification will be deemed to have been met for borrowers with original principal loans less than $2 million. We did get a lot of questions of if I am over 2 million and I pay down a portion of the loan to get me to under 2 million, does that mean I meet the good faith certification? Everything that we've read, everything that we've heard indicates that it's based on the original loan amount. So getting yourself under $2 million doesn't necessarily get you out of the woods there. And it further stipulates that PPP loans greater than 2 million will be reviewed, as will other loans deemed appropriate. Todd's going to get into when he talks about the application that the SBA is requesting that you maintain all your documentation for a long period of time. So they are setting themselves up to once they get through the $2 million loans, to further their review to some of the smaller loans as well. And if adequate basis to support the good faith certification does not exist, the SBA may require loan repayment. So as long as you do repay the loan, they're saying, no harm, no foul. If the borrower repays the loan after receiving notification from the SBA that the SBA will not pursue administrative enforcement or referrals to other agencies with respect to the certification regarding the necessity of the loan request. Okay. And then came along some new ones. So May 14th, there was a release which allowed qualifying partnerships to increase PPP loans if the self-employed partners were excluded from the original loan application. If you remember back to our earlier webinars, it was never a doubt in your S corps, because in an S corp, an owner can take a salary, and therefore there were wages to support loan amounts. But there was a lot of question as to what happened with your, partners and your active partners and partners. Do they qualify? Do they not qualify? And it was further determined that they do qualify, and those are capped at the $100,000, similar to the payroll issue as well. So there is the opportunity, if you didn't apply, and you do have those folks, there is the ability to apply to get more money. However, in order to qualify, SBA Form 1502 must have been submitted by the lender to the SBA. So again, if you didn't apply, you want to apply, again, first call is to the bank to make sure that they did submit that form. And for loans approved prior to the release of SBA Form 1502, eligible borrowers have until May 22nd, so that is tomorrow, to ask for the increase in the loan. And then on May 18th, 2020, there was a additional release, which relaxes the 500 employee headcount threshold in situations where borrowers have both U.S. and non-U.S. employees. So if you're a U.S. subsidiary of a foreign-owned corporation, we did get some questions on this. According to the to the SBA's original eligibility standards, you would have had to look through to affiliations unless you were if you were a franchise or you were in the food and beverage industry, or you met the alternative size standards. However, they are relaxing the threshold here as long as you applied for your funding prior to May 5th, 2020. And just a reminder that the payroll costs still only include expenditures for employees with a principal residence in the U.S. And now I'm going to turn it over to Todd for the long-awaited, highly anticipated, I won't say underwhelming, but it'll be great, PPP Loan Forgiveness application form.
Thank you, Josh. I was waiting for the drum roll, but that's okay. So folks, this is, we're going to go over the application form. This is kind of like going back to school. So we're going to highlight the different sections verbally, and then we're going to actually show you the application form and then talk about documentation. So this is kind of like a show and tell, but we're telling first and then we're going to show you. So just stay tuned as we're going through this. So the SBA finally released this application for forgiveness form on May 15th, 2020, after they consulted with the U.S. Treasury Department on the form. And it answers many borrower and lender questions, but it leaves a number of items open in need of clarity. And Josh is going to kind of cover that towards the end of what's still open. And so we need to tell you, and we've been informed, that there's additional SBA guidance forthcoming. So just remember, the SBA does like to release things very late at night and usually just before the weekend to ruin our weekends. But let's do a little recap, which you'll see as well on the form of how this works, the forgiveness formula recap. Step one is you start with eligible costs that are forgivable, that are spent in the 8-week period. and it's payroll cost, and at least 75% of the forgivable loan amount is payroll cost. And then certain non-payroll costs that are capped at 25% of the forgivable loan amount. And those are items such as interest on mortgage obligations, rent, and utilities. That's step one. Step two, you apply a formula that considers the workforce reduction, which is A divided by B, the average number of FTE employees during the 8-week period beginning with the date of the loan origination, and B, the average number of FTE employees from February 15th, 2019 through June 30th, 2019, or January 1st, 2020 through February 29th, 2020. Step three, and actually on the form, you'll see that step two and step three are kind of reversed, but it really doesn't change things. Step three, you decrease the amount by certain employees whose wages were reduced during the 8-week period by an excess of 25%, compared with the most recent full quarter during which the employee was employed prior to commencement of the period. And got to keep in mind the $100,000 limit. You'll see that on the application. And step four is for the period from February 15th, 2020 through April 26th, 2020, where there was a decreased number of FTE employees or wages, and you restore the FTE employee count or wages by June 30th, 2020 to the pre-February 15th, 2020 status, you get a reprieval. So let's kind of talk about these different sections in the application form before we look at the form. Take a look at the fact that they're defining payroll cost again and kind of tell us about something new, the alternative payroll covered period. So you can elect to begin your 8-week covered period on the date of the first pay period following the receipt of the proceeds. 56 days. They're trying to make it a little bit easier for people so they're not kind of squeezing in additional payroll periods. Paid or incurred, payroll cost incurred during the 8-week period but paid on or before the next payroll date are forgiveness eligible. The $100,000 cap applies to cash compensation. That means $15,385 for the 8-week period. Owner compensation. Compensation for owners, partners, etc. is limited to the 2019 amount and capped at $100,000. Also, we were able to now understand what they meant by full-time equivalents. So full-time equivalents are measured at a rate of 40 hours per week, and the instructions to the application form provide a formula to compute the average FTEs based upon the average paid hours, and a wonderful simplified method is available as well. All right, so on the form, the application form, we get some more definitions. The covered period. The alternative covered period is not available for non-payroll costs. Okay, paid or incurred, non-payroll costs incurred during the 8-week period but paid on or before the next billing date are forgiveness eligible. Rent or lease payments. Payments for both real property, buildings and facility leases, and personal property, equipment, furniture, software, vehicles, etc. are forgiveness eligible. It kind of defined for us a little bit better, the personal property, so I think there's more that might be able to be added there. Mortgage interest payments, payments of interest on loans for both real property and loans for personal property are forgiveness eligible. But the line of credit interest is an allowable use. Allowable use, I stress that point for PPP funds, however, not eligible for forgiveness. And the forgiveness formula, once again, you'll see it on the application. Non-payroll cost forgiveness is limited to 25% of the total amount forgiven. They also put in that the idle advance, the SBA will automatically deduct the idle advance of up to $10,000 from the forgiveness amount requested. All right, some more definitions on the application form. Headcount and wage reductions. So we're talking about the two things that will reduce your forgiveness. Talks about the June 30th, 2020 date, that wonderful date. The date used by borrowers to determine if a headcount and/or wage reduction occurred, irrespective of when the 8-week period begins or ends. So remember, some of you receiving the money, it may actually go into July, maybe even further, I don't know. But that June 30th, 2020 date is the golden date for measurement. Headcount reduction, FTE reduction safe harbor. So there's a safe harbor that's actually stated here. It eliminates the negative forgiveness implications for situations in which the FTEs that were terminated between February 15th, 2020 and April 26, 2020 are rehired on or before the magic date, June 30th, 2020. So the FTE reduction safe harbor has seniority over the FTE reduction analysis that was detailed in the CARES Act. So the CARES Act reduction analysis requires a comparison of FTEs during the 8-week period versus February 15th, 2019 through June 30th, 2019, or January 1st, 2020 through February 29th, 2020. And the CARES Act interim final guidance reduction analysis offers seasonal employees additional comparison periods. We're going to take a look at the application in a moment and show you that. So the FTE reduction exceptions, again, further clarification, SBA FAQ number 40 eliminated the negative forgiveness implications where previously terminated employees decline a written rehire opportunity. And there's some additional exceptions. The application also provides some additional scenarios to avoid potential forgiveness reductions where employees were fired for cause, or voluntarily resigned, or voluntarily requested and received a reduction in hours. And then finally, 25% salary / hourly wage reduction formula applies an average salary comparison for purposes of determining if a greater than 25% salary reduction for employees earning annual compensation less than $100,000 has occurred. And this solves the mysterious mathematical irregularity that was included in the CARES Act that required a comparison of the 8-week covered period to a prior full quarter, which obviously is 12 weeks compared to 8 weeks. So I'm going to pause here and I'm going to ask us to pull up just a few of the examples from the application. And folks, I'm not going to go through the entire application. We did actually include it as a handout. So you can peruse this. My advice, and this is what we're advising our clients and the folks who are consulting with us, we could advise you to go through this and actually see where you stand. Obviously, you can't know everything yet, but so this particular first form is actually the forgiveness request form. You could see they're asking for some important information like your name and the amount of the loan, etc., the employees at the time of the loan application, and also at the end of what your payroll periods are, the covered period, and if you're choosing an alternative payroll cover period, what that is. And if your borrower with your affiliates received an amount greater than $2 million of PPP loans, you get to check the box. That means that they're going to look at this sucker. So you can see here again, this is the top form, the forgiveness amount calculation. Line 1 is your payroll costs. That's actually, you're going to see it from the PPP Schedule A, line 10, that we're going to show you. Line 2 is your business mortgage interest payments. Line 3, your business rent or lease payments. 4 is the utility payments. And then you have your adjustments for your full-time equivalents and salary hourly wage reductions. Line 5 is actually showing your salary wage reduction amount that's coming from a supplemental schedule. You're also going to add all the lines together, lines 1, 2, 3, and 4, and you're going to subtract the salary and hourly wage reductions. You're then going to have your FTE reduction quotient that's going to come from your supplemental schedule. It's going to show your potential forgiveness amounts. This is what you've all been waiting for. The modified total, which is the multiplication of line 6, which is your total line, by line 7, which is your FTE reduction quotient. And you're going to also show your loan amount and then your payroll cost, which is the 75% requirement, which is the line 1 multiplied by line by 0.75, and that's going to give you your forgiveness amount. And you're supposed to enter the smallest of lines 8, 9, and 10. So that's kind of the cover sheet. Actually, we didn't show page 4. We didn't want to get into too much depth, but page 4 actually is a certification that we've been talking about for the past couple of webinars. So let me just kind of go through quickly the supplemental schedule. This schedule, the supplemental schedule, and the one I just showed you with the certification is what you're going to actually submit to your lender. So you're going to, there's 2 different tables here. The first table is you're going to enter your cash compensation from the worksheet that we're going to look at, the FTE number, and then also the salary and hourly wage reduction. And if for whatever reason you fall into that safe harbor, as it says here, you are going to check the box and put 0, which means that there's no reduction. The difference between the 2 sections we're looking at here from table 1 and table 2 is table 1 is employees that received their salary was under 100,000, and then the next section, which is table 2, is those who received salaries greater than $100,000, and so there is no reduction in salaries calculated, but the FTE is. So you could see after that is the non-cash compensation payroll costs during the covered period, the amount that's paid for the employer contributions for employee health insurance, the amount paid for employer contributions to employee retirement plans, and also the amount paid by the borrower for the employer state and local taxes assessed on employee compensation. That brings us down to line number 9, which is compensation to owners. So the total amount paid to the owners, employees, or self-employed individuals, general partners, is put here, and this amount may not be included in your PPP Schedule A worksheet, table 1 or 2. And if there's more than one individual included, you need to attach a separate table that lists the names and the payments to each. So that's going to give you total payroll costs, which is line 10. You're adding 1, 4, 6, 7, 8, and 9. And then you're going to do that wonderful calculation, which is your full-time equivalency reduction calculation, which if you have not reduced the number of employees or the average paid hours of your employees between January 1st, 2020 and the end of the covered period, you check the box and you get to skip lines 1, 11 through 12, and you enter 1 on line 13. But if that's not the case, then you need to also include the average FTE during the borrower's chosen reference period, the total FTE, which you're adding lines 2 and 5, and then the FTE quotient, which is you're going to divide line 12 by line 11, or you're going to enter 1 if the FTE safe harbor is met. Okay, I'm going to go through quickly the worksheet just so you can see it. You know, table 1 and table 2, the difference between the 2 tables is that table 1 are employees that you employed during the covered period or the alternate payroll covered period, who also resided in the US, who received an amount less than or equal to $100,000 for all pay periods in 2019 or were not employed by the borrower at any point in 2019. You can see you're actually putting the names of the individuals, their identification, cash comp, the average FTE, and then whether or not there was a salary or hourly wage reduction. And you have those different boxes that flow back into the supplemental schedule. And then table 2 is the table that is for all those employees under the covered period or the alternative payroll covered period who lived and resided in the US, but their salaries or wages were under $100,000 for any pay period in 2019. And you can see the difference between the two is that you don't have that box for the salary wage reduction because they're over 100 grand. And it says, well, attach some additional tables if additional rows are needed. Now, interestingly enough, the FTE reduction safe harbor, you're going to enter the borrower's total average FTE between February 15th, 2020 and April 26th, 2020. You're going to follow the same method that was used to calculate the average FTE in the prior worksheet. You're going to sum across all the employees and enter that number. Then you're going to enter the borrower's total FTE in the borrower's pay period inclusive of February 15th, 2020. And you're going to follow the same method that was used in step 1. And if the entry for step 2 is greater than step 1, then you get to proceed to step number 4. Otherwise, the FTE reduction safe harbor is not applicable, and the borrower must complete line 13 and do that wonderful ratio of line 12 divided by line 11. But if it is greater, then you enter the borrower's total FTE as of June 30th, 2020. And if the entry for step 4 is greater than or equal to step 2, you enter 1. And that's a good number on line 13 of the PPP Schedule A. The safe FTE reduction safe harbor has been satisfied. Otherwise, the FTE reduction safe harbor doesn't apply, and the borrower must complete line 13 of the PPP Schedule A by dividing line 12 by line 11 of that schedule. So I think I've worked up a sweat by going through all this. So let's go back to our deck. And folks, really, I think spend the time, go through the application, and I think you'll kind of get the gist of how all this flows. But let's talk about the documentation submission requirements, because I think that you really should be compiling this as you're going along. Don't wait until the end. And let's kind of go through what the requirements are. First, like Josh was saying earlier, you have to keep the documentation for 6 years after the date the loan is forgiven or repaid in full. 6 years, which leads us to believe that that's probably going to be the statute, and there's a possibility that you may get that wonderful email, letter, certified letter, or knock on the door anytime between that time and 6 years. And the SBA and the Office of Inspector General must be allowed to access documents upon request. So for payroll, documentation of eligible cash and non-cash compensation amounts. You need to keep that documentation. Here's some thoughts as to what that will be: bank statements, third-party payroll service provider reports, and applicable payroll tax filings, and support for employer contributions to health insurance and retirement plans. Non-payroll, documentation verifying the pre-February 15th, 2020 lease and or utility obligations, which will include, but not exclusively, amortization schedules, bank statements, cancel checks, receipts, lease agreements, and or utility invoices. And then, of course, a documentation for the average number of the FTEs for the various periods: February 15th, 2019 through June 30th, 2019, February 1st, 2020 through February 29th, 2020, or any consecutive 12-week period between May 1st, 2019 through February 15th, 2019, which relates to seasonal employers. So While not required for submission, borrowers must maintain the following records as well. Employee by employee documentation. Get that? Employee by employee documentation for amounts included in payroll costs, both above and below the annual $100,000 limit. Documentation regarding employee separation events, including job offers and refusals, firings for cause, voluntary resignations, and written requests by any employee for work schedule reductions, and documentation supporting the FTE reduction safe harbor. You can see they want you to keep all this information costs. It's likely if you're over $7 million, they're going to want to see that at some point, possibly, and possibly even under that. And then there's also this wonderful form that the government likes to keep track of other things that really don't relate to forgiveness, this optional PPP borrower demographic information form, and it says completion or non-completion has no bearing on forgiveness. So they want more information on who is requesting this. So going through this, I tried to do this as thoroughly and as quickly as possible. I now want to turn this over to my partner, Josh, who's going to tell us what's still not clear. Josh, tell us what's still not clear.
Hey, Todd, thanks. So just to add 1.2 with respect to documentation, since I left it off before and I had a placeholder in the slides that said document, but and I forgot to say it, but in light of FAQ 31 and FAQ 46, we still think it is very, very important for you to document why you need the money, why you took the money. And again, we've discussed it at length in prior webinars. There's resources on our COVID-19 resource center as to what types of things you want to include in that documentation. But as Todd mentioned before, the SBA could request all this information, and I do believe it will also include rationale as to why you did keep the money. So you want to have that as part of that documentation as well. So the application is great. We got some further clarification. We got some more information on payroll, FTE, headcount, but there still are some questions unclear. We want to revisit those again. We've added, we've taken away. So we wanted to just take a minute or two to go through this with you. I think the number one question is, will the 8-week period still be extended? As Steve mentioned in the onset, there are some things out there possibly floating around that pushes the 8-week period beyond. However, until we get that further guidance, it's important to go forward as that the 8-week period will be the 8-week period. For enterprises that are closed and are not making payroll costs or other payment, does the alternative covered payroll period start with the date the first payroll payment is made? Great point, right? If you can justify it, or can these people delay the commencement of the 8-week period only to the date that the next payroll should have started had they made that payroll? So only when I open, right? That's when my payroll begins. Is that when my 8-week period begins? How does the paid and incurred standard impact retirement benefit and bonuses paid during this time with respect to forgiveness? We're getting a tremendous amount of questions with respect to paying calendar 2019 bonuses, 2019 matching and profit sharing contributions during this time with use of that money. I think from our standpoint is you pay it, so at least you satisfy that standard, and we see what additional information comes out with respect to, can we deduct 2 months of it? Can we deduct a year of it? This is really the great unknown. And what does it also say for current year bonuses and current year retirement? Are we entitled, what is it that we're entitled to include in this calculation during this 8-week period? Are corporate shareholders who also are employees allowed to include non-cash benefits in forgiveness requests where partners and other self-employed individuals are expressly forbidden. So it talks about the $100,000 cap for the self-employed individuals, not including any kind of benefits. However, if you're a owner in an S corp and you have wages and benefits, those amounts were included on the application. So it will be interesting to see if they scale back all owner compensation to $100,000 per person, or if they allow you to include the $100,000 compensation plus the non-cash benefits as well. Will the expenses be deductible for tax purposes? We know the forgivable loan is not taxable. Prior guidance said that those expenses relating to the monies that are forgiven are not deductible as well. But there's also a lot of fighting in order to free up those expenses to be deductible for tax purposes. We still don't know how the state taxing jurisdictions will treat the forgiven funds. I'm surprised, to be honest, that there's been no new information on that. Will the 75-25 split between payroll and non-payroll costs be eliminated or revised? We're going to talk in a minute. A lot of clients are really struggling with getting to the 25% number. And even going back to what Stephen said before with the HEROES Act, that potentially eliminates it or modifies that percentage. Will the costs eligible for forgiveness be expanded? To this point, right, with respect to non-payroll costs, it's utilities, it's rent, and it's mortgage interest. But will we be allowed to include more expenses in that calculation? We still don't know what is the definition of a transportation utility. I know a lot of folks would like to include, the fuel, the gas, the tolls incurred on trucks used for construction, delivery, all those things. We still don't know. We do know that there are certain jurisdictions that do charge a transportation utility tax for use of public transportation systems and things of that nature. Not sure if that's what that means either, but we do know that is defined. However, wait and see. And then my $1 million question is, great, they put this out today, everybody's looking at it. I'm sure people are going to start filling it out as soon as we get off the webinar, but much like everything else, how many times will this application change prior to actually being submitted? And much like with the application process, many banks came out with their own applications. It'll be interesting to see if they actually follow the SBA here, or if they come out with their own application as well. So stay tuned, and let's see what else happens. So one of the other things we wanted to bring up is we've gotten some interesting questions, as you can imagine, through our portal. So just want to share with you what some people are thinking, asking questions about. Maybe it hits home with your business, maybe it doesn't. But we got an interesting question yesterday. What if I have a self-insurance plan? Do I include claims paid, if they were incurred prior to the loan funding date, right? So we know in that situation, it could take months to get the claims. So claims I'm paying today may have well been incurred, months ago to this point. And my claims that are incurred today, I may not pay for a couple months. So what do I include with respect to my, health insurance for the non-payroll, for the payroll costs for this period? Really interesting question. Another one, I'm not doing an employee match. I'm on a 401k plan, but I am paying the fees for the employees. Can I deduct that? I do not believe that you can. It's only contributions made to the benefit plans. Another person along the same lines of insurance, can other insurance be included in the payroll costs, right? If you pay workers' comp, for some professional liability companies or service companies, you do pay professional liability insurance on behalf of the people who work for the company. Is that included? That has not been defined. I think it's information that you gather, you have at your disposal, and we see what additional guidance comes out with respect to that. I got another question. What are people doing who are struggling to get to the 25% of the non-payroll costs? I do believe that the expanded definition of rent and mortgage interest to include personal property should help folks get a little bit closer to that number, as it takes you outside purely facility rent or interest on a building purchase. Can I include family members on the payroll to help me get to hit the 75%? This is something certainly want to stay away from. They are going to look at payroll before and payroll after. And if you are including family members, who weren't included before, that's something that would be easy to, decipher from a review standpoint. And last question, just want to share because I've heard it a couple times. What if I got funded with amounts for 1099 contractors as part of my payroll costs? And I'm guessing these are the folks who applied on day one, with the 1099 amounts included in the application. We all know it was further clarified that the contractors were excluded from that calculation because they could be, they could apply for funding on their own, and the loans were not subsequently adjusted. The conversations that we've been having is to really, the money earmarked for those, the money that you received earmarked for those contractors, I would certainly put aside and not spend, and you still try to maximize, what other costs you can within that 8-week period, whether that be for your payroll, your employees' payroll, and your non-employee costs. But again, I would segregate that money with the idea of certainly paying it back. It may not hurt to give a call to the bank just to give them the heads up and say, hey, we were funded, with this. We don't, plan on spending it, or we do, but it never hurts to give a heads up in that situation. And the last option is you can certainly call the SBA and kind of pick their brains as well. They've been rather helpful with questions. So those are some of the questions we're getting. We certainly encourage everybody. There have been a tremendous amount of questions that have come through the website. The email address is right here. You can email your questions to COVID-19@Saks LLP. And again, we encourage you to do that. It helps us put together content for the webinars, but it also helps us to share these questions with our partners, clients, and all of you who are attending. So thank you guys very much for joining us today. Of course, we'll be here next Thursday, 10 a.m., hopefully with more good information for you. And of course, copies of the slide deck and the presentation should be available, along with all of our other resources at our COVID-19 Resource Center at saksllp.com. With that, I'll say be safe, be healthy, have a very happy Memorial Day, and hopefully we see you all again very soon. Take care.